Bank of Canada today, they finally did it, guys. They dropped the interest rate. I'm Jordan Silvester, and I'm here to give you my 2 cents on what that might mean in the upcoming market for investors, for first-time homebuyers, for everybody. What's very interesting, it affects the variable rate. The overnight rate does not affect necessarily your fixed 5-year rates that we see in Canada. Right now, those are still right around 5.25%. Again, as you're moving in, that's still creating quite a bit of tension on people who are trying to either refinance their properties or look to buy their first properties. When you're walking this out, guys, you have to understand, so the variable rate coming down is beneficial because that means the government is seeing that they need to help push the economy, which means we're trying to generate more and more income out there. I think over the next few months, as we continue to see them drop the interest rate, the overnight rate, hopefully by maybe mid next year this time, that rate will come all the way down where it's going to be floating right around 5% instead of 6.95. And if we can do that, then the discount rate at the bank will be close to 4. And if the fixed rate at the same time can get down to about 4.5, I think that's where we're really going to see the investment world come back to play. I think we're going to see a lot of the first-time home buyers and people being able to refinance their mortgages and kind of get through this next phase. Because there's a lot of people who over these next few months, they say 70% of mortgages are renewing in the next 18 months. That's a lot of people who have to look at probably a 2.5 to 3% interest rate, going all the way up to about a 5 to 5.5% interest rate. For a lot of families, that's going to be pretty tough as we move forward. For investors, same thing, because their objective was to create cash flow, and a lot of them only look to be $200 to $300 a month in cash flow. With the rate almost doubling on them, how are they supposed to stay in cash flow? So a lot of these investors might be looking to sell their homes, and then that's going to displace tenants. So again, I want to look as a community together. How do we find affordable housing where we're able to benefit all parties involved? The investor who's trying to help tenanted families who need the support. You have the first-time home buyers who are out there trying to get into their first home. You have the current families who are living in their homes that are expanding and growing and would be looking to move up. How do we support each and every person as we continue to see these rates adjust? How do we work through that? And again, when we look back 2.5 years ago, into 2021 and early 2022 when the market was booming and the rates were still really low. We don't need to get all the way back there. I don't think that was healthy, but right now I believe we're also not overly healthy. We need to find a balance where the market hopefully holds right around 4%. I think for most families, they'd be able to withstand what that looks like over the long term and be able to correct for it. We'd be able to support each other. And again, if you need resources, you're looking at a way to bring extra income into the home, different, strategies we have to survive. If you are in a position where you're going from a 2.5 to a 5%, and you're like, I don't want to have to sell my home, to reach out, chat with me. I have some strategies in my world that I hopefully could bring to you. Doesn't mean you're going to choose that strategy, but at least there's options. It's not just, oh no, I have to sell the home. There might be things we can do to help support you in your home long term.